Raoul, you've said before that you believe that Ethereum could become bigger than Bitcoin. What are your 3 reasons why this could be the case?
I just want to reframe some of this. I think talking about DeFi is missing the point. It's like focusing on a micro aspect of what is the start of the digital renaissance age. Everything is going to change. It's not just how we bank, how we transfer money, how we store value. We're moving into a truly digital world of which everything around us will change. You know, people need to start getting familiar with things like the metaverse to understand where this is all going. And across that, once you start creating a digital world where, you know, everything from education to where people socialize is digital, where people store value, transfer value, create opportunity is all digital. That whole world is a very large world of which we now have this pristine collateral base layer, which is Bitcoin, which is phenomenal, right? That gives it the stability and the anchor point from which to build. But I don't believe that it's all going to end up on the Bitcoin blockchain, and it doesn't necessarily have to, even if it's suboptimal. I think it's a much larger space, and there will be a interoperability amongst protocols to create this digital renaissance age. And within that, Ethereum probably plays a large role. So, and I see it differently than I see the Bitcoin ecosystem currently. Again, that may change. We don't know where this is all going. It's organic. You know, it's driven by millions of people. It's not driven by one person saying we're going there. So where it goes is where it goes. But I think probabilistically speaking, it is a multi-protocol interoperable world with Bitcoin at the center of it.
Thank you. Raoul. Michael, will MicroStrategy also invest in Ethereum?
You know, our view is that, you know, Bitcoin is a treasury reserve asset, and it's $1 trillion. And that makes it the most stable monetary body in the economic universe. So we just went and borrowed $1 billion. We invested in Bitcoin. We'll wait for Bitcoin to flip gold. We expect to make $10 billion off of it. When I look at things outside, and I think that that's Bitcoin is, if you look over the last 6 months, the price is going up at 700% a year. If you look at liquidity on Binance, it was trading 605 million a day 6 months ago. It's trading 4,937,000,000 a day. That's up. That's growing at a rate of 1,376% a year by a factor of 10. So the liquidity is exploding in Bitcoin. The price is moving up. It's stabilizing. If I look at innovation opportunities, I feel like there's 3 pockets of innovation in the world. There's crypto innovation at the base chain level, and that's what Ethereum is. And there's other crypto assets that are working on innovating in that level. There's crypto innovation at the layer 2 level, which is what Lightning is, or open source things on top of Bitcoin. And then there's a lot of centralized innovation going on at Square and PayPal. When Fidelity issues an ETF, when Morgan Stanley tries to sell a fund, all of these are innovations, big tech and finance and Bitcoin banking and crypto banking and centralized things. I think, look, you can just go borrow $1 billion, buy Bitcoin and wait 3 years and you might make 10 billion. That's financial, you know, that's just a financial play. That's a play. I feel like, to Raoul's point, we've got an explosion of opportunities, and you can decide that you want to focus in on the base layer crypto innovation area, or you can focus on layer 2 solutions, or you can just do more pedestrian things like ask yourself, if you're Fidelity, how do you plug into digital assets? And everybody's got their, you know, their opportunity. It's so big. So, you know, and you can build an insurance plan that's based on Bitcoin, and it would be 100 times better than every insurance plan in the world right now. Is anybody doing it? No. Could you make hundreds of billions of dollars doing it? Yes. It's just a different thing. So I would say hundreds of thousands of opportunities. No human mind can grasp every opportunity. It's going to be a competitive market, and who knows who's going to prosper and who isn't. I don't know, but Raoul would say the market will sort it out, right? And just let the markets be the markets, and capital will flow to wherever it's going to work. And that's part of the wonder of what's going on right now.
Hundreds of opportunities, competitive landscape. We have, the audience is about 150 family offices from across the globe. We've done a little bit of a tour d'horizon across Bitcoin, Ethereum, DeFi, what it means on the macro scheme, what the problems are with the fiat, current fiat ecosystem. Now let's spend the last 5 minutes, and I don't see yet major questions in the chat. So I would love to do one final round in the last 6 minutes to just ask you, okay, put yourself in the shoes of a CIO of a family office, single family office, or a multi-family office, or a principal. Why does the crypto space matter? Why should you get into the space? What are maybe some guidelines, some best practices that you would wanna pass on to them, and maybe your view on in a overall portfolio, what percentage allocation do you feel is reasonable for family offices to get exposure to this asset class? Maybe kicking it off with Patrick, I would ask all of you to just keep it to a minute or so, that everyone has one last round.
I think ultimately, if you're a family office or if you're an individual allocator, you have to look at the data. The data doesn't lie. If you take back the data from, and let's take out the periods where Bitcoin really did crazy rallies. So you know, like an Olympic diving competition, you got to take out the 2s, you got to take out the 10s. So if you look at the last decade or so, and if you looked at just a simple median allocation of 2.5% into any 60-40 standard portfolio of stocks and bonds, that would have improved your return by about 15%, increased your Sharpe ratio by about, I think, 0.48. So you would have had better returns with a very small allocation, about 2.5%, in a very standard 60-40 split with no additional things like commodities and stuff like that. You might have experienced slightly more volatility, but overall you would have come on the other side a lot better. So I think anywhere between 1% to 5% of any family offices allocations. And of course, there are other ways to participate, of course, in the underlying asset without necessarily just buying and holding. I think buying and holding is great. I agree with Michael in the sense that, you know, you can look to it as a long-term store of value. But then, you know, if there is that portion that is slightly skeptical about where is this thing going to end up, then there are also other ways for you to participate in the underlying asset whilst hedging those positions. So you could take a non-market market agnostic sort of approach where you sort of trade the volatility. One of the things that we can definitely be
Patrick, if you can keep it short, short so that the others, yeah.
All right. So yeah. So anyway, that's what I'm saying. But anywhere between 1 to 5%, 2.5% is probably a nice median.
Perfect. Thank you, Peter. Your take.
Yeah. So as for the impact of delta in crypto assets to adding it to a traditional portfolio, our analysis suggests that there are a number of key observations. The first is the outperformance of crypto funds relative to the crypto market overall. And the second is that there is ample evidence that to get the most of the allocation in this space, one should allocate up to 5% of the portfolio to DLT in crypto assets. A 5% allocation to crypto funds will, according to this evidence, again, approximately double the annual return, Sharpe ratios, or TINA ratio of a traditional investment portfolio and improve the maximum drawdown. And does all of this with a rather limited impact on portfolio volatility. And this is because a diversified range of crypto funds has a much higher return and a much lower volatility than any mainstream crypto index over the full crypto market cycle.
Thank you. Raoul.
Well, I'm not the right person to ask because I've got 100% of my liquid net worth in Bitcoin and a bit in Ethereum and a few other assets. The point being is to frame it in terms of portfolio effects, particularly for family offices, is not that relevant. What you're deciding in a family office is, what does the world look like in the future, and what am I trying to transfer across to the next generation? This is the future. That's how I started this whole conversation today. It is the future of the entire financial system. It's the future of the digital world. It is the future of how we're going to transact in that world, how we're going to create opportunity in that world. And it's best represented currently by Bitcoin. So to not have a significant proportion of your portfolio and a significant of your proportion of your mind share is really missing the big picture. And I talked about this recently. We've basically just discovered America. There's a whole new world. And you can be the European saying, well, everything's going to remain the same. But it didn't. And it won't. And so that is what you have to do. You have to embrace this new world. So you need to be braver than you think you do. You need to ignore things like volatility, because volatility is just a function of return. And so you have to embrace the volatility and understand what it means.